In this video, you will learn first how to trade volatility indices. You will also be learning the easiest volatility trading strategy in the market. This strategy is so simple but very powerful in the market, and you will use it to do wonders on your account. And lastly, I'll be teaching you how to apply good risk management to your trades. This is what a lot of traders are lacking. You need to learn how to make more profit from your trade and at the same time safeguarding yourself from a lot of losses from the market. Now, let's get to it. Alright guys, so in today's video, I'm going to be teaching you about how to trade volatility indices. And this is the easiest way that you can trade volatility indices. Like I will tell you guys all the time, it's not every trading strategy that works on volatility indices. That is the reason why a lot of traders failed in the market. They try to use all trading strategies for all indices, but that is very wrong. So a strategy that works on boom and crash sometimes may not work on volatility. And the one that work in volatility will not work in boom and crash. You guys already know the nature of the market on boom and crash. So when you are trading on volatility, you must have very effective trading strategy. You all know that volatility likes to move in very, very strong ways in the market. They don't move in one way like the way boom and crash move. They move in diverse ways. So you can trade it with diverse strategies in the market. One of the best trading strategy you can use on volatility indices is the trend line. The trend line is like the mother of all trading strategies in the market. And you guys, I've already taught you guys a trading strategy using trend lines in my previous videos. And today I'm about to teach you another strong and powerful trading strategy, trend line trading strategy in the market. And this one is very simple. So you guys already know the processes, but I have to guide you through again just in case you are watching my video for the first time. So the first thing you do when you enter the market is to first of all understand the trend of the market that you're trading. So right here we are trading an uptrend. If you look at the movement of the market here, you can see that the market is strongly moving towards the upside. So the market is moving in an uptrend. So when we see the market moving in an uptrend, so what we do is that we try to take advantage of the uptrend movement. So we try to trade according to the trend. So when you're in an uptrend, all your trading strategies should be aimed at trading the trends. It should be aimed at finding a bullish setup. If you are trading the head and shoulder, you want a bullish head and shoulder while you are trading the uptrend. If you are trading double top and double bottom, when you are trading an uptrend, you are looking for double bottom and so on. So if you are trading with a trend line, you also have to look out for bullish trend line setup. So our trading strategy today is very, very simple, and this is how we trade it. So first of all, you already know that you are moving in an uptrend. So because the market is moving in an uptrend, you want to trade with the trend. So the first thing you do is that you look for the trend movement in the market. So for example, when you are in an uptrend, you want to see some bearish trend movement. So this one here is a bearish trend movement because you see the market had a high here, a low, a lower low, a lower high, then a lower low. You can see the market making this move. So when you see this move in the market, this move here, this move right here. So you draw your trend line on them and you look out for your breakout. So today's strategy is going to be all about trend breakout. So when you see a breakout, that is where you even think about entering a trade and stuff like that. So when you see a breakout, like currently here, like currently here, we have a breakout of the trend line. You can see the market broke out of the trend line here. So we are waiting for something else when it breaks out. And I'll be telling you guys very soon. So let us see another example of this on the chart. So right here, we have the same thing. From this point here, you can see that the market is moving in an uptrend. You can see the strong reactions from the buyers moving the market to the top. Now, when you have the market moving in an uptrend, you want to look out for bearish trend movements, such as this one here. So right here, we have a bearish trend movement. We have the high, we have the low, we have the lower high, then we have the lower low here. So when you see that, it's like you're drawing out a trend line, you're drawing out a new trend line. But this time around, you are not focused on trading the trend movement. You want to trade the breakout of the trend. So you draw out your trend line here, and then you wait for the market to break out. So when you have the so when you have the breakout here, that is when you start looking out for trading opportunities in the market. So here you can just draw out something here. So right now, after the breakout, you're wondering how you are going to trade the market after the breakout, which is the most important part of this, because every day you are going to see the market break out in multiple ways. And you need a great trading strategy to be able to trade this breakout, because this breakout is very, very deceptive. You must have heard of fake breakout before, and we have the fake ones, we have the real ones. So when you see a pure breakout, let's say the market broke out of the trend line like this here, when you see these breakouts, you know that the market has already broken out of the trend line. See this? So what's the next thing? What do you do next? Next thing you do is that you draw a line from the last point before the breakout. So right here, we are in an uptrend, and this little trend here is a bearish trend, which means this is a little downtrend. So you draw out your line from this last move here before the breakout. If this one here, if this one here was the last move before the breakout, we would have drawn our line there. But you can see that we used that place to draw our trend line. So there was nothing like a breakout there. And it was only after it got to this point here, that the market broke out. So since this is the reason, this is the cause of the breakout, this zone here is very, very active in the market, and we want to see what the buyers are going to do when they get back to that zone. So what do? The first thing is that you draw out your trend line from the little downtrend movements. You wait for a breakout, and after the breakout, you want the market to return to the last zone before the breakout. So this point here is the zone in the market. This is the zone that broke out this trend line. So when you have that already, there is one thing you have to do, and which is you have to watch out for a bullish pin bar. So for this strategy, we are going to be using a pin bar for our entry signal. Why do we use the pin bar? Because the pin bar is very, very bold and indicative of what is happening in the market here. So for example, here we have this pin bar here. It means that the buyers have grown enough strength to push the market to the next level. And when I say you should trade a pin bar, I don't want you to start trading a bearish pin bar in an uptrend. So when you are moving in an uptrend here, you want to trade bullish pin bars for an uptrend. you trade bullish pin bars for an uptrend, and you trade bearish pin bars for a downtrend. Now, what do I mean by the bullish? Some of you might say, okay, because moving in the buyer's direction, but that's not the reason here. So right here, what we mean is that if you are trading the market, if you are trading this market here, since we want to buy this market, now if you look at these candles here, you see that the blue candles represent bullish movement, and the brown candles or ash color represents the bearish movement. Now, it is only when you see the pin bar turn to blue, that's the only time that you can trade the market with it. You need the pin bar to be blue if you are trading in an uptrend. So when you are trading in a downtrend, you need the pin bar to be red. That is bearish. Just like something like this here, you need it bearish. But when it is in an uptrend, you need it to be bullish. It must have a bullish color. So when you have that pin bar, when you have that bullish pin bar, the next thing you do is that you take your trade. Just take your trade and you place your stop loss just below this last movement here. If it was the pin bar that was the last movement, then you just draw it below the pin bar. Then you place your take profit target at the top. So that's how it works. Let me show you guys another example on the chart. Alright, so right here we have another example on the chart, and you can see that this market here is moving in an uptrend. So look at this. You see the market moving in an uptrend. It is making higher highs, lower highs, higher highs, and lower highs. So when it's moving in an uptrend, you have to look out for bearish moving trends inside an uptrend. So these ones are the little bearish movements in the uptrend. The little bearish movement in the uptrend. That's the little downtrends in an uptrend. So when you have this little downtrend, this one here, you draw out your line just the way you draw out for your normal trend line strategies. And then you wait for the market to break out of the trend line. See the way it broke out of the trend line here. So after breaking out of the trend line, you draw your line on that last movement that broke the trend. So right here, this is the last movement that broke the trend. You can say. So now what's the next step? You wait for the market to return to that last movement, that last point that broke the trend. So when it returns to that point, you are looking out for a pin bar. You are looking out for a pin bar. So when you get a pin bar, you can now trade the market. And as you can see here, we had a pin bar. So we have this pin bar here. And from here, we can now trade the market. You can trade the market from this point here. Now, to trade this market here, let's imagine you were fortunate to get this setup. You just place your buy limit order here. Then you place your stop loss below the pin bar. Do not place your stop loss like too much. Don't take it too far from the pin bar. Just a little bit below it. Because if the strategy is right, it will never move below that pin bar. So you place your take profit target at the next high, just like I did here. Now this is a $2.29 risk, and you are getting 12.59 for your trade. Now let's imagine we are trading with this 0.05. Let's say we are trading with 2. So that is 9.16. we'll be making $50 for this trade. You see, sometimes it's not about how small the setup look, it's about the risk. Now this pin bar here gave me less risk for my trade. And I told you all before in my previous videos that we only trade the market according to our risk. And any strategy that we use, we are trying the best way to trade it and make more profit from the market. Each time you see a pin bar very small, let's say you see the pin bar like this, very small, your goal is to tune your lot size in such a way that you'll be able to make more money for that trade. Let's imagine you want to trade with a $10 risk. Now you have 9.16 here. Let's imagine you want to use the whole of that $10. That's a 2.1. That is 9.62. Let's say 2.2. Okay, that's 10.08. And if you use 10.08 for this trading, for this setup, you're going to be making $55.41 for the trade. So it is that easy and simple to do. Now let me take you guys back to the first example that I showed you guys. Alright, so we have this trade here. This is the first example that I showed you guys. So we have this trade here. This is the first example that I showed you guys. So for this example, you have seen it just the way I've taught you guys already. So you wait for the market to create this little movement here that is opposing the main trend. So the main trend of this setup, of this overall movement here. So because the market is moving in an uptrend, we want to see a small downtrend move like this one. So when we see a small downtrend move like this one, we now want to enter the trade. So when we see a small downtrend move like this one, we'll be looking out to take a trade. So the first thing we do is that we'll wait for a breakout. So this was the breakout here. See the breakout. And if you bear me witness here, you can see that this price movement here was the last low before this breakout here. Or is there any other one here? There's no other one. So this one is the last low. And because this is the last low before this breakout, we can now draw our line on it. So that's why we drew this line here. So when we draw the line here, the next thing we are looking out for is a pin bar, a bullish pin bar. So this right here is the man that we are looking for. This is our guy. So when we see our guy, then the next thing is to enter the trade. It's as simple as that. So when you see this guy here, this handsome boy here, the next thing is to enter the trade. It's as simple as that. So if you want to take this trade here, you have to tune it according to your risk management. Let's imagine now you want to trade with a $5 risk. Now, when you see this pin bar, you have to be fast before the market will leave you behind and move too far from your the point where you are. So to use like, okay, let's say I want to use like $20 for this trade. All right. So let's say that 3.8. That is 20.35. Now let me do this again. So here we have the line. So when we have this line here, this is our sell limit here. Let's imagine I'll place our stop loss here. Stop loss here below the pin bar. Just below it. I told you guys that if the setup is okay, you don't need to be afraid. It will never get to that point. So you place your take profit target at the top. So now So now I'm risking $20 on this trade to make $228 for the trade. That is crazy, bro. That is so crazy. And this is the kind of trade that I want my students to take. I want everyone trading this video to be able to be taking this type of trades and winning a lot like this. This is the kind of trade that will help you as a trader. It's not those 2x 1:1 stuff. You won't go far doing that. So you need trades like this that will help you to grow. Now, in our VIP signal group, I drop trades like this. Just want somewhere where you can be making your money every single day. Join our VIP signal group. The link is in the description box below. And if you are new to Deriv synthetic trading, you can sign up with a broker using the link in the description box below. Register your accounts, deposit your money, and start trading with us. So it's as easy as that, guys. I will see you guys in the next one.